Hello, thank you once again to watching my video. And my name is Seewing Yee from the Yee Real Estate Network. And my special guest is once again is Mr. Caleb Canazzi from Buffalo, Niagara Falls, Buffalo Turnkey to be exact. Welcome, Caleb. Thank you for your time once again. And I just want to give our investors and anybody else out there and some updates. So let me go through a approximately 2-minute rant, R-A-N-T, rant. Okay, here's what I've done so far lately. I took the liberty of talking to as many investors as possible that purchase in your turnkey system, that purchase your properties over the past 4 years that my company has been working with your turnkey system company in Buffalo, Niagara Falls, New York. And I also done some additional research and due diligence. You know, each time for the past 4 years, I promote your network, your system. I create a pro forma, you know, I do the actual cash flow analysis on some of your properties at any given time in the past, right? And it has the purchase price, it has the rent, projected rent, it has all the underlying debt service, and then my pro forma, if you saw them, then my pro forma also shows the capitalization rate, the rent to value ratio, the cash on cash return, and the total ROI, right? So this is a numerical metrics, which is clearly one need to analyze before they buy any investment properties, right? So, and then I compare I compare the purchase price a year ago, 2 years ago, 3 years ago, depends, and then I go through Zoom. Zoom. I mean, Zoom is not 100% accurate, but you know, they are somewhat accurate. So, and I show the before the purchase price versus when I click on Zoom and I type in the address of the property that our investors purchased from your network, and I see the difference, right?
Yeah, the Zillow.
Yeah, the Zillow. Yeah.
Yeah.
Yeah, the Zillow. So, you know, again, it's not 100%, but you know, it's an approximation. So, do you know what is my conclusion? Okay.
Tell me, yeah.
I'm gonna tell you. Then, yeah, then you're going to either validate what my conclusion or give me some heads up. My approximation, am I close in the ballpark, or what have you? I know every case is different. Every investor purchase is different. Our investor purchase in one neighborhood in Niagara Falls, 1 block away is different than another neighborhood. You know, it depends whether they purchase a single family home, a duplex, a triplex. You know, there's a lot of variables involved. But so I cannot be precise, neither can you, but we can speak at a high level, right? I mean, some high level thought process. And again, the past performance, as you know, in real estate, the past performance is not indication of what's happening in the future. No one knows the future. No one have a crystal ball, right? So I just want to make this past expectation. So the few consultation I had, quite a few actually, with my clients that bought from you. Here are some of the what's happening, and I did a comparison with Zillow. The purchase, for example, let me give you a couple of examples. One of my clients bought a single family home from you for $40,000. They did financing, which is great. You know, not too many lenders can finance a cheap purchase price, but our loan agents are able to do that. So that's the power of being part of my network. Whatever. That $40,000 property, someone purchased like 3 years ago, and I check on Zillow, the price has doubled to 80 grand. Another example, one of my clients bought a duplex from you for like 2 years ago for like 65,000. And when I checked the Zillow, I think the value is showing on Zillow on that specific duplex like 125,000, from 65,000 to 125,000 in 2 years. Another situation, another client bought a property for 75,000, a duplex, I think a year and a half ago. And I think the current price per Zillow again is around 125K. I could go on and on and on, right? I have like 15 cases. I'm not gonna go over the 15 cases. I spoke with like 4 or 5 of my clients that purchased through you. If I would talk to my clients more down the road, they will probably share with me a similar case scenario. Also, another thing that I checked, I also see the rents have increased, not significantly, not 20 or 30% rental increase like it occurred in some other markets in the country, but increase nevertheless, like 10, 50% rental increase. So our investors purchase through you, in many cases, the property have increased in the past 3 years, 50 to 100% equity appreciation, almost double in value in a 2 or 3 years time span. And their rental cash flow has increased to 10 to 15% over year in the past 3 years. Now, I know it's too good to be true, but I want to say this one thing. Moving forward, you and I will say that the inventory listing you're going to show for us, let's, for example, a duplex on your inventory listing today, for example, a duplex for 75K, it rents for maybe 900 to 1,000. But the problem today is the interest rate. The interest rate for investor as of today could be, depends, 7.5%, even 8% investment loan 30-year fixed rate mortgage. Because of the higher interest rate, the cash flow is lower, even in your Buffalo market. Presumably, the properties in the Midwest and Midwest of the US generally would receive a lot of cash flow because the prices, the benchmark of purchasing price is so low versus the rent, 1% rent to value ratio, 1.5% rent to value ratio. Because of the interest rate so high, that cash flow is a lot less. Does that mean investors should not buy any properties anywhere in the country right now because of the higher interest rate? No, investors does not buy based on interest rate. Investors buy based on capitalization rate, based on cash flow, albeit lower cash flow. But later, investors can always refinance their current loan rate into a lower rate so they can get back to a higher cash flow. But as long as they buy today to capture, all the benefits of, investment, home ownership, and all that stuff. So I know I'm talking very fast. I know I covered a lot of topic, and you have not even begun to open your mouth yet. Don't ask me.
I like listening. Yeah, it's good to hear.
Don't ask me to repeat myself, but you try in your head to capture the high level of what I just said. So since you is the consultant for the buffer turnkey system from a high level, can you share your thoughts on what I just said? Try, do your best. Go ahead.
Sure. I mean, what you said it sounds pretty accurate as far as that goes. Like, especially like in previous years, I'm not sure which properties you're referring to when you were talking about how they've increased quite a bit just in a couple of years. But that is very accurate. Many houses have gone up a lot, especially certain areas, certain pocket areas, depending on where those investments were. Yeah, they've gone up a lot. And like there's like an old joke, like a realtor joke about Zillow a little bit though, is that the A in Zillow stands for accuracy, and of course there's no A in Zillow, so it's not always the most accurate, but it does give you kind of a little bit of a benchmark on like the neighborhood a little bit, or they also have like projections basically for like how much properties are going to increase in the future, and then also they'll have like a little line you could see like the history to see like you can just click on properties in Buffalo if you want to click on properties, any of your investors, and just see that like it's the trend is upward as far as that goes. But of course, yeah, past results does not guarantee anything in the future. It's just it's very hard to know where you should put your money right now because stocks are super high and pretty volatile right now. We don't. I mean, I personally don't like stocks too much. I've lost money in stocks this year, a little bit, not much at all, and it's not gone so well for me. But and then what real estate, I mean, you get a hedge against inflation. It's not like sitting on cash. If you're just going to sit on cash, inflation is just going to kill you there. And then real estate's a really great hedge for that. And then you could hope for that appreciation, and then you're getting cash flow off of the property. So it's where do you want to put your money that you have, that your hard-earned money that you earn? So it's I think real estate's a good place for that.
Yeah, Caleb, you're absolutely right. And let me go through another thought process. Look, okay, most people, the mass media, the mainstream media, of course, they talk about all the trophy markets, the up and down, boom town, bust town, housing crash, which is totally wrong. There's no housing crash anywhere, really. Correction, yes, in certain markets, there's no such thing as a national market. Because only every market is different. You have to look at the specific market, and not only the specific market, you have to look at specific neighborhood, the specific house. That's the focus of a real estate investor. You have to buy in the right house, right lot, right neighborhood, right city, right region, and they have to buy from a team of seller that are trustworthy, that have been doing it for a long time, and that does it right. And there's a turnkey system that cover all the bases and all that stuff, and that's what you guys have. So again, which is good and bad. I mean, bad in that most people doesn't even know where is Buffalo Niagara Falls in the U.S. map. That's bad. Bad is that bad is that the news media and the YouTube videos, everything is doom and gloom. All the people clickbait, try to promote negativity so they can. Those YouTubers out there, they want to get subscribers, so they just trash the real estate market. But anyway, so that's the bad. The good is I don't want people to know about Buffalo Niagara Falls because I want our investors to buy all your great listings that you guys have, right? I don't want to alert the mass media, oh, everybody come to Buffalo Niagara Falls and buy this cheap homes with high cash flow and good appreciation. I don't want any competition. I am what you call it. Anyway, I'm greedy. I want my network investors to profit, and I don't want any competition. Although you guys have a lot of competition because of Buffalo Turnkey, you guys been doing it for decades, and you guys are a family-run business, and you do the right thing. Everything is a one-stop shop: property management, rehab team, construction team. And you when you find the right properties every single week, you have a good high-level listings every week that we can target. So tell me what else is going on. Okay, so with that said, so tell me moving forward, what is I know cash flow is being lower due to the higher interest rate, but that should not stop investors. So Caleb, give us an update about your market, Buffalo Niagara Falls, your listings, pros and cons, and what have you. Just give us a high-level update.
Sure. So yeah, of course, interest rates, yeah, they do affect the return on investment that people are to expect. It's basically obviously, yeah, it's going to be lower, but as far as we know, the Fed is going to continue to raise interest rates. So right now, if you were to buy soon, essentially, you're going to lock in a lower interest rate, which historically the interest rate right now is really not bad at all. Like 30 years ago, that's I mean, it's still lower than that. In other words, for that.
Yeah,
And
I'm sure
then
your
as
father, I'm sure your father back in 1980s. I remember the mortgage interest rate back in 1981, 82, 18%.
Yeah, he probably does. I don't quite remember that one, but yeah, it was very high. So, and then of course, if, as you said at the beginning of this video, like if for some reason interest rates do decrease, then you could just refinance or if investors prefer, I mean, there's different types. You could get a fixed mortgage rate. You could get very. I mean, there's lots of different options that banks will give you as far as interest rates if you want fixed or not. But that would be up to your individual investors to decide.
Right.
But as far as the market goes, it has slowed down a little bit for homeowner houses. We've seen because we also do some sales to homeowners, like we'll put them on like MLS to sell to homeowners, and those have been slowing down too, because a lot of homeowners are being priced out due to those interest rates. But the investment properties, essentially, in other words, what your investors are going to be purchasing, those are still pretty strong, because the reason people are investing in those is because they are going to need to put somewhere to put their money, and they're getting the cash flow. Homeowners obviously are buying the house to live there, so when they if your mortgage is just increasing by a lot due to the interest rate, that does affect how much purchase power they do have. So a lot of homeowners are slowing down for just moving out. They're a lot of people are having like the wait and see how the market is going to be as sort of attitude as far as homeowners. But the investors, they're still coming in a lot. You mentioned that Buffalo, you don't want other investors and people noticing Buffalo, but like in the past couple of years, especially like during COVID, we have seen, like, we used to say Buffalo is America's best kept secret as far as investing, but it does seem that the secret is getting out a little bit more too. We're seeing a lot more people from like even New York City, Toronto, the UK, Israel, Tokyo, and what other place there's I'm blanking right now, but we have another, Bangladesh. Yeah, there's a ton of like and people from Bangladesh that are buying cash too in Buffalo, especially like in certain pocket areas too. So because they don't, a lot of people like to live together, but like so it's a very interesting market, interesting time right now, but it's pretty good here.
So Caleb, let me get this straight. Let me get this straight, what I just said. What I hear you saying is your turnkey properties off market that you guys created in your own portfolio are not purview, is not in a multiple listing service. And consistently, even in this allegedly down housing market, you have investors from out of state, from California, like our network buyers, and also from Canada, also from UK, from Bangladesh, and from Israel, from Jordan, from Australia, wherever they are coming into your market, they're coming into your inventory listing. The off-market listing only purview to a specific group, and they are coming. The overseas buyers are buying your properties, 60 grand, 100 grand, 120 grand, single-family home, duplex, triplex, 100 years old, 80 years old, but they are very rehab, very, very nicely done. It's all turnkey, it's all done, great rehab, great renting and all that. And they buy, those overseas investors, most of them buy with cash. They're not per investor out overseas, if I hear you correctly. They're not buying one, they're buying 2, 3, 4 at a time, all cash from overseas. And furthermore, as I understand, correct me if I'm wrong, the out-of-state investors, whether they're from California or other part of the area of the country, they converge into your inventory, and they buying with all cash, with 25% down payment, even with a 7.5 interest rate, even with an 8% interest rate, they can still cash flow 25% down, albeit just a little, not that much. But as I said, you date the interest rate, you marry the investment property. That's my philosophy. You date the interest rate, you marry the property. You like that?
Yeah, I do like that. That's nice. But the one thing to just say real quick, for the cash investors though, they're not really affected by the interest rate as much, since they're literally purchasing the entire property cash.
Yep,
So it's not just a down payment, but
that's right.
yeah. So we do get people. I mean, obviously, a ton of people still finance, but yeah. So a lot of people, just because they'll see properties here, especially from bigger cities areas, the property prices here compared to where they are, it's insane. Like a full house there is like $1 million, where if you get a full like 1,400 square foot house here for 80,000 or something, that's like they're flabbergasted.
Caleb, I just came back from overseas vacation. My wife's family live in Seoul, South Korea. So I just came back from 3 weeks vacation. I mean, and I did a video when I came back, and I compare the housing prices in the U.S. versus housing prices overseas. There's a difference between night and day. An apartment in Seoul, South Korea, like 600 square foot, will cost you like almost $1 million. Okay,
Yeah.
I mean, when I tell my overseas relative about the house prices in the U.S. are like, average nationwide 400,000, and even in San Francisco Bay Area where I live, the median price of home is almost 2 million. My in-laws in South Korea, they were not impressed. They say, "Wow, really? Housing prices in the U.S. is that cheap?" They can't believe how cheap U.S. home prices are right now. They would love to buy 10 houses in the U.S. as an investment. They would love that, but they don't need to. They are already fairly wealthy, and they were just a cookie cutter family in South Korea. So I've been over more than 50 countries in my lifetime. I travel more than 50 countries and most part of the US. And countries like China, Hong Kong, Japan, South Korea, Singapore, and Taiwan. I mean, the housing prices in this area are like 3, 4, 5 times higher than the US home prices. That's why, same thing with Europe. Over Europe, the home prices in Europe is so expensive compared to US. And even Australia, Canada, that's why your properties in Buffalo, like 60 grand and rents for $750, $100,000, it rents for $1,200. A triplex for $150K, whatever, rents for $2,000. These numbers is off the chart. Overseas investors, when they see this number, I mean, this is like McDonald's. Give me 3 of those, give me 5 of those.
Yeah.
And our investors, some of them are not really financially well off. They can get financing on a 60 grand property in your Buffalo area. Finance a $60,000 property. I mean, that is amazing. I mean, not too many lenders are willing to finance such a low purchase price, but our loan agents are able to do it. So, you get the bang for the buck. You get good cash flow, long-term appreciation, and even though your properties are very old, to me, it doesn't matter. Yeah, some investors, they think, oh, these properties are old, 80 years old, 100 years old. They're going to break down all the maintenance costs, all the vacancy, whatever. How can you explain some investors, they have this mindset, oh, it's too old, a lot of fix-up costs, it'll eat up all my cash flow, I have to fix it up, this is that. How you can overcome some of these objection?
Well, basically, these properties, they've been renovated many, many times over the years too. If you're buying like a 100-year-old property, it doesn't still have the same furnace or the same electric or the same. It's all been updated possible many times. Like it doesn't have the same original kitchen or anything like that. Generally, those things are going to go. Like you don't have. We're not selling you a property with 100-year-old roof on it. Normally, it's like a 5-year roof or a 10-year roof on it or something. Or even brand new. A lot. We're doing tons of roofs all the time. Like. So it's yeah, the property's old and the structure will be older, but the structure, I mean, a lot your property owners they'll get property inspections too, so he'll list out basically that the structure they're very sound properties. People live here in these old houses. If you were to try to build a house and nowadays the same specs as the houses we're trying to sell, it would probably be like $300,000 if you want a brand new property and everything. So it's yeah, but basically essentially it's just everything has been updated at some point pretty much. Well, not everything, but
Yeah.
the foundation, everything is still the same like that. But they're the roofs, all that other stuff has been done.
So Caleb, what I hear you saying is that you cannot judge a book by its cover.
Yeah, you gotta look at the properties. You gotta do your due diligence. Have an inspector go through. Look
Right.
up the values. Yeah, see our products for what it is, and that we're selling an excellent product.
Yeah. The picture of all your houses may not look good. The picture that may not look good, but investment property is beyond the picture. It's all about the house, the structure, the foundation, all the great upgraded rehabs. And again, the picture may not look all that great. It's not a pretty house. Is your girl next door house, blue collar type of situation, but this asset class, this single family home, duplex, triplex, fourplex you guys are selling, the numbers make sense, right? It's all about the numbers, right? If an investor can overcome the not so nice looking from the outer picture of it, but the inner aspect, you cannot judge a book by its cover, because the return is all about the rent value ratio, is all about the return on investment, it's all about the cash flow, it's all about the cash on cash return, it's all about the capitalization rate. All those numbers, I've done my due diligence on behalf of my investors. The numbers make sense, because when I create a pro forma, when I create the cash flow analysis for my investor, and I look at the gross rent monthly minus the mortgage, 6, 7, 8, 9% mortgage does not matter, because you're not paying a mortgage, the renter is. Then you minus the monthly property taxes, the monthly insurance, the monthly property management fee, and I factor in 7% maintenance and 3% vacancy. And then I add up the total debt service monthly. Then I compare that to the gross monthly rent. Guess what? The gross monthly rent is higher than the debt service. At the end of the month, you have a positive cash flow. That is a winning formula, right?
Yeah, absolutely. Yeah. That is the dream there.
Yeah. So I know I'm selling you more than you're selling yourself, but Caleb, I know you. I know your company. You don't need to sell yourself. Your track record stands for itself. I mean, you guys have been doing this for a very, very long time. You specialize in out-of-state investors, in overseas investors. You provide a great product that have a good return on investment. And the future, I assume the future is going to be good. I mean, your market are not impacted by all the negativity we hear out there. There's no crash. There's no bubble in the market. There's not even any correction. I did a video on based on the Redfin, the website Redfin, and they track all the housing markets. I did a video on the Buffalo Niagara Falls market. I see the Buffalo Niagara Falls market continue to rise in appreciation. There's no crash. There's no reduction in value prices. I don't see any of that. So anyway, so what are your thoughts? We're concluding. We have about maybe less than 5 minutes left. So what are your thoughts on what I just said, and add some additional recap, and then we should be done.
Yeah, sure. I mean, what you just said, I mean, that's pretty good, and it's interesting about the Redfin. And I haven't really checked out Redfin personally, because the one a lot of people always mention is like Zillow or even like Realtor.com or something is what I hear a lot. But yeah, I'll have to check that out. But yeah, the market it's pretty good here. Like I said before, the homeowner ones have definitely slowed down a bit. So you're not getting like crazy offers like you saw in the past. But yeah, properties are still selling, people are still buying, people still need places to live, and if you're not buying, you need to rent. And where are these renters going? They're renting they're renting your house where they're going to pay for your mortgage and make you money, in other words. So the rents will increase if they're not buying houses. You have to live somewhere. So that's kind of the nice thing about real estate, where it's not something like technology where it could change super fast. Real estate, it's something that everyone needs, and it's not going anywhere.
Absolutely true, Caleb. So I think that's all we need to say. I mean, yep, investor should look into your market as part of their portfolio acquisition strategy. So no doubt about that. So our investors can buy 25% down payment, 25 to 35% down payment. They could buy with all cash because your properties are still so cheap compared to the other housing markets, as you know. And they can also, our investors can also buy with their self-directed IRA all cash. So 3 ways our investors can buy your very inexpensive property, even though your properties have grown tremendously over the past few years. So buy with financing, regardless of the purchase price. Our lender, our Wells Fargo guy, Ian Dornfeld, is the guy that can do the low-cost financing, 40, 50K homes. He can do financing, which is amazing for our investors. 25% down payment, 30% down payment, using several different loan options, 30-year fixed rate at 7.5%, or interest only, 10-year loan. You get a lower payment if the investor want to do that. Or they can buy all cash. A lot of people buy for all cash in your market, in your system, in your turnkey off-market system, and then a lot of people buy with pure cash, and you have a lot of repeat buyers. People come back to you consistently over years, keep on buying because they want cash flow, they want appreciation, they want everything. So
yeah, pretty much.
Yeah. So any last parting words you have to say for my investors?
No, I think we did a pretty good job, unless you have any other specific questions to add, or.
Yep. We said it all. Thank you so much, Caleb, for your time. And yeah, we'll march on. We'll go with the status quo.
All right, sounds good. Always good seeing you, Seewing.
Sounds great. Caleb Canazzi from Buffalo Turnkey. Thank you so much. Have a nice day.
Okay, thanks. Bye-bye.
Bye-bye.